What if I told you there's a way to pay your kids right off your kitchen model and use Airbnb to eliminate $92,000 in taxes, all legally? One of our clients, let's call her Wendy for privacy purposes, is a mother, property manager by day, and a mom of three by night. And she just found out that she's getting a $15,000 tax refund after years of writing checks to Uncle Sam. And it's not magic, it's strategy. This video is going to walk you through the exact way and how she did it and how you can too. Wendy came to us managing 13 Airbnb listings for other people, but paying way too much in taxes. She got a part-time job as a realtor. She had a side business. She had adult kids in college and a dream for her and her husband to escape the 9-to-5 and build wealth with real estate. She was doing all the work, remodeling her kitchen, funding her kids' schools, taking care of the kids, getting paid for everything through her personal Venmo, and she's still writing checks to the IRS. Does this sound familiar? Once we sat down and mapped it out, here's what we found. She actually qualified for real estate professional status because she's spending over 750 hours managing the property, remodeling her future midterm rental, and she's doing this more than anything else that she's working on. We also found that she can pay her kids with 1099s, and instead of using 63-cent dollars, after-tax dollars to support them, she can shift that income to their lower tax bracket and keep more money in the family. She also found out that she could write off her home remodel because her primary residence is about to become a rental, and all of those kitchen upgrades are now tax deductible. She's also buying a short-term rental this year, and if she closes before the end of the year, she can use the short-term rental loophole to accelerate depreciation and offset her and her husband's W-2 income. And she also started logging miles and was able to deduct the business use of her cars, even though she did have some personal use and the car was in her name. Oh, and we cleaned up the commingling mess that was created by getting paid by her Venmo to switching all of her income going through her business checking account to avoid the asset protection risk and also an audit risk. Here's how she's legally cutting her taxes. So first up, we've got the short-term rental loophole. So she needs at least 3 stays, and the average stay of all of her stays for this rental needs to be under 7 days. And then she must materially participate. So generally there's 2 ways that most people materially participate when we're talking about the short-term rental. And it's spending 100 hours of material participation and more than anyone else, or spending 500 hours total. With one property, it's kind of hard to do that, but with the multiple properties, that 500-hour rule can come into play. Most people, though, go after that 100 hours of material participation. But with this result, she was able to save $60,000 of depreciation in year 1, which was almost 20% of the purchase price. She also qualified for real estate professional status. She already manages properties full-time. She was logging 750 plus hours and proving that she worked in real estate more than anything else, but she was never getting the benefit from it. Her old CPA just said she couldn't qualify. We were able to use a cost segregation study and bonus depreciation, which again offsets both the W-2 and business income. Then she started paying the kids as 1099 contractors for the work that they were already doing on these properties. So the family now pays less in taxes overall, and the kids can take their own deductions for mileage, cell phone, and other ordinary necessary expenses for the work that they're doing. Her primary home is now becoming a rental, and that makes those capital improvements deductible. And it also avoids any gray area of her trying to write off her personal kitchen. Wendy went from feeling overwhelmed and underpaid to being in control with a $15,000 refund and a plan to offset $92,000 in future taxes and a clear path to financial freedom. Her next steps: buy another short-term rental before November, use the tax savings to reinvest, keep track of her hours, keep the receipts, and then set up a charging order protection entity to protect her assets as she starts scaling. If you're a W-2 employee running a side business or scaling real estate and you're tired of giving away money to the IRS, this is your playbook. Subscribe to the channel for more real estate tax hacks like this. And if you want help setting up your own strategy, click the link below to book a strategy call or go to bristertaxlaw.com to schedule a discovery call today. You don't need to be a millionaire to start building wealth. You just need to learn the rules and play the game better. My name's Anthony Brister, and I help families cut taxes, protect their assets, and change their family tree for the better. We'll see you next time.